But what will happen over time will depend on how the economies develop and how the policy develops and how the politics develops. So there's a lot still to play for.
But you have said that the pound has more downside from here. And, do you think that would be the cue that the markets would take every time the pound has a big fall, the markets would get jittery?
They are trading a little bit in step with each other right now, yes. And I think, if the pound does weaken materially from here, and by that I mean, from the 140-ish level to the dollar, it's because the politics hasn't worked out, or the current account deficit, the UK runs the largest current account deficit in the G7, is ballooning, or because inflation's running out of control because of the currency depreciation. So for it to really sell down is probably down to bad stuff. And if there's bad stuff, then it's understandable if the stock market falls, and the European stock market's with it.
Right. So, how much would you peg the downside risk to be at this point? Because for the pound, they're saying, 1.3 would hold out. And then, of course, there are views, going across on the euro's outlook as well, where the euro is expected to weak further. But I remember long back, you were more bullish on the euro given the current account surplus that the European region runs. So,
which is still the case.
The
thing is, as your viewers in India will know, when currencies move, they can overshoot. Think back to a couple of years ago when India was one of the fragile five, and the rupee was pushing 70 and looking like people were forecasting 80, 90, 100. So I think the same is true for the pound, which is that it's the same dynamic actually in some ways. We run a fiscal deficit, we run a current account deficit. This will be familiar to people in India. And the currency needs to weaken under that circumstance to make it more attractive to foreigners. So I'm not going to give you a point and figure forecast. You probably guessed that already. But I think the trend is weaker rather than stronger because of those, just the amount of money that has to be sucked in. And by contrast, the euro, unless we do seriously get to a political breakup of the European Union, I think we're away from that. The euro is probably more likely to sort of stay around here or maybe even appreciate a little bit.
Many would be relieved when, by that statement that we are perhaps very far away from a potential breakup or disintegration of the EU or the euro. Why do you feel that that's a long shot?
Well, I think first of all you have to look at the mechanics of it. Very few countries in Europe will allow you to have a referendum without it being mandated by the government. I'm not sure after last week's events that many governments in Europe want to take that particular risk. I think the challenge for the European leaderships are that there's a number of critical elections coming up. There's a referendum on constitutional reform in Italy in October, which is effectively a vote of confidence in Prime Minister Renzi. Then there's elections next year in France, Germany. We've just had Spain, the Netherlands next year. So this is really where these populist parties, whether it's Marine Le Pen in France or Beppe Grillo with the Five Star Movement in Italy, I think it's the response to those movements that's really where the challenge lies for the European leaders now.
But don't you think a wave of anti-globalization would sweep across the European region? And, as you said, the elections pretty much reflect that. More a sense of let's get local, let's focus on, each country for itself, let's focus on our country and its growth.
I think that was the British. The British have always been reluctant Europeans, and now we're not going to be Europeans in that sense. Whereas, because for many European countries, there's a much closer identity because of the legacy of where they've come from. So I'm not altogether sure that there's as much fragmentation in Europe as political commentators suggest, or rather I think it fragments slowly rather than it blows up. What would make it blow up? Well, the migration crisis clearly tested it quite hard. A banking crisis that spread across the continent as a whole and the ECB couldn't contain. I think it's those sort of things. But and I'm sure there will be a material increase in protest votes at this forthcoming election cycle.
So between the pound and the euro, you see more strength in the euro?
Well, fundamentally, unless Europeans lose faith in it or lose faith in the European project, and that's the critical caveat. Yes, a currency with a current account surplus should probably always do better than over time than a currency with a current account deficit, unless the latter is very, very cheap.
All right, two more concerns in the market with regards to the UK ex-EU story. One is, are we on the brink of a potential currency crisis if the pound continues to fall further from here? And, whether that will have a rub-off on other currencies across the world. Second, of course, there being this further infusion of liquidity from the Bank of England. Just announced that they put in about £3.1 billion. They're going to be supporting the markets even more, supporting the banks even more. And the tumble that we saw in the financial sector, UK financial sector yesterday, sent chills down the spine, because it just reminded people somewhat of the 2008 situation.
As indeed has happened with the European banks as well. I mean, we've seen very big falls in bank shares and in bank credit. In Italy, for example. But yes, the banking system in the UK, the Bank of England's principal aim has to be to support that system, financial stability.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.